Madan Sabnivas is Chief Economist at Care Ratings. He's joining in right now. DK Joshi, Senior Director and Chief Economist at CRISIL. He's with us as well. Gentlemen, thanks very much. Good morning. Prashant this side. Let's start with, this morning things are looking a little better, at least from our perspective here in Mumbai. It's raining, the weather is nice. So it looks like the monsoons are not exactly all faltering. And of course, you've got all the right talk coming out of New Delhi. The Prime Minister sort of getting to the heart of the matter as far as the economy is concerned by saying and talking about some of those retrograde tax policies which have been criticized, and at least saying that they need to be addressed. Not saying what will be done or what will not be, but saying they need to be addressed. Madan, let's start with you. I mean, should we get excited? Should we get hopeful?
No, I don't think we need to get excited, but hopeful definitely yes, because these are the right sounds coming out. But we should remember one thing, that even when we had the earlier finance minister, that all decisions which are normally taken at that particular level are taken with a consensus of the Prime Minister and the other ministries which are concerned, the Planning Commission and so on. So I think what we are really going to see now are probably certain marginal policy actions which are easier for us to go ahead with. Maybe something on the retrospective taxation, maybe something more on guard to say that it won't happen at all. But in terms of any far-reaching, deep-reaching reforms, I really don't think there is much room for maneuver, because there are certain social considerations which should also be taken into account, which will necessarily mean that we need to go to the parliament. So I don't think those kind of big bang changes in policy are something which you could expect in the current environment.
Mr. Joshi, sir, your first thoughts?
Well, I think we definitely are in a pretty dire situation, in the sense that growth has slipped and the inflation refuses to budge. So that's one aspect of it. Second is, I think we're seeing the currency being hammered down, the current account at a very precarious level, and rupee remaining vulnerable to the mood of foreign investors, which right now is quite subdued. So I think overall the macroeconomic environment is pretty weak, and there seems to be a sense of urgency that I think we need to address this, particularly whatever is within our control, which essentially takes you to propping up the private sentiment at this juncture, which requires, as Madan was saying, I think even if you take small steps, I think at this juncture, I think they'll play a pretty significant role in lifting the mood. I think things like giving some boost to manufacturing by ironing out the issues in mining, which directly feed into manufacturing. I think maybe clearing the projects at a slightly faster pace. I think all these things is something which they should address on an urgent basis. And I think if they manage to pull some reforms also along with it, I think that will create possibilities of a sustained high growth going ahead. But I think immediately, I think we need some lift to the sentiment, and we also need some lift to the growth, which can come from these small actions.
Madan, I don't know who, but somebody called it the announcement effect. Essentially a few big bang reforms, or not big bang, but stuff which can be done administratively, creating that atmosphere which essentially will has the potential to significantly change the sentiment and kind of bring in investment. I mean, a lot of people are saying, I mean, that should be the aim right now, because obviously some real serious stuff on the ground will take time to show up. But it's the atmosphere you create.
No, that's true. In economics, we always play around with this word called announcement effects. So when you're talking of announcement effects and you say something, some positive words, it definitely has a positive impact on the market. But that's only to begin with. But finally, to make sure that the market really is convinced about what these announcements really mean in terms of whether they're really going to be implemented, I think that's what's going to really determine the future course of action. So maybe today we're seeing that the market is up. It's because of certain right sounds which have come from Delhi. But for this to be sustained, in order to make sure, because we're looking at investors, for example, foreign investors, not just the domestic markets, they actually need to be convinced that something is really happening at the ground level. Now, given the overall kind of pessimism which we're seeing both in the world economy as probably also in our own economy, announcement effects will probably work for a couple of days, but not beyond that.
One expectation, Madan, isn't, Mr. Joshi, if you have thoughts on this, come in, that the technocrats at top levels will basically be given a free run, essentially to fix things. I mean, right? That's the big hope. Dr. C. Rangarajan, Montek Singh and others who are close, who are being seen as being close to the Prime Minister, would have a free hand in deciding at least on some of these administrative things. I mean, that's reason to cheer, Madan?
Yes. Yeah, there definitely is reason to cheer because there has been a lot of slack which is there in terms of implementation of certain measures, in terms of implementation of projects. So what they are talking about is actually tightening up the strings, and considering the fact that we have been pushed to the wall in terms of the overall economic environment, I'm sure that we will see certain positive things coming on. But this is not really something which is going to sort of change things in a very big way. In an incremental sense, yes, we could see certain improvements taking place. But if we're going to talk in terms of will industrial production actually shoot up, will more foreign funds come into the Indian market, just tightening up administration will not be adequate on its own.
Although there is still some uncertainty whether, I mean, Dr. Manmohan Singh will sort of hold on to that finance ministry portfolio or it's just a temporary sort of, arrangement before the portfolio is given to somebody full time. You know, the problem is arresting the fall in the currency, Mr. Joshi, and the other is, fixing the balance of payment. Thankfully, right now you got help with the rupee, with oil prices coming down and staying down, at least for now. And if oil prices stay down for the rest of the year where they are, I mean that essentially will mean real and big numbers.
Yeah, absolutely. I think oil accounts for 30% of our import bill, and I think if you also add gold to that, which is another 10% of the import bill, I think about 40% of the import bill got inflated because of the high prices and also because of the high demand in the last year. I think what we should see is that with oil prices coming off, we should see, and also with the gold demand now taking a hit, we should see current account softening going. I think our expectation is that instead of 4% current account deficit, which is for 2011-12, 12-13 will see about 3.5 to 3% of current account deficit. So there is clearly a softening on that part. And if along with that, I think we see risk appetite improving in Europe towards the second half of the year. And also along with that, if we take some positive steps, I think rupee could change its course, and I mean it could be on an appreciation path. Though we don't expect very sharp appreciation of the currency, but clearly I think this the current one-way direction of the currency will definitely be reversed.
Okay, got that. We'll say, so now it's basically the.
Prashant, could I add something to this?
Yeah, please.
Yeah, actually, I would tend to agree fully with what DK Joshi is saying. I'd just like to add one more factor. I think the World Bank had brought out its global economic prospects maybe a couple of weeks back. I think one of the indicators which they have given is about the flow of portfolio funds to the emerging markets. Now here there was a certain disturbing fact because in 2010 they spoke about something like $130 billion coming in. This came down to something between $20 and $30 billion in 2011. And in the current year they're actually talking of something like $16 billion. Now if they're talking of only 1/6, that is $16 billion moving to the emerging markets. So even when we're talking in terms of RBI liberalizing certain FII limits, say in G6 or so, how much of the overall, when the overall kitty itself is not going to increase about the funds which are coming into the emerging markets, we cannot expect too much of respite over there. So I think that's going to be one of the limiting factors when you're talking of overall balance of payments. While current account deficit definitely would improve in case crude oil prices remain low, we're not going to get too much of respite from the capital account, which so far has supported the current account deficit.
Yeah, absolutely. I mean, absolutely. Let's just bring in the other thing which is worrying a lot of people, which are monsoons. The IMD has put out its second stage forecast. They're calling for monsoons, I think, at 96% of the long period average. And Madan, I'm sure you looked at this 4-year cycle of monsoons, right? Every 4th year, the monsoons, and this is data which is being cited for the last 50 years. Monsoons are deficient. Of course, it's still an average, so you might miss the mark by a year or two. But what's the just contextualize the importance of monsoons in the context of our godowns being full of grains, overflowing with grains. Actually, there were reports of the government thinking of exporting grain for the first time. Just put those two in context. Yeah, what's the impact?
I think we've seen the traditional, conventional. If we're looking at If you look at a conventional kind of relationship between, say, a good monsoon and a good harvest and lower prices, I think that has gotten severed over the last couple of years. Because we have seen in the last 2 years, we've had good monsoons, the harvest has also been fairly good, but we haven't really seen food prices coming down. So I think we just need to put one fact in mind, that a good monsoon is a necessary condition for a good harvest and maybe lower prices, but it's not a sufficient condition, and there'll be other factors which will be at play. That's the first part. The second part is, even when you're talking of a normal monsoon, we have seen that the geographic spread is more important and the crop coverage is more important. Now, here we have seen, for example, in the last year, there have been shortages in case of pulses, in case of oil seeds, which has led to not just higher prices, but also higher imports. And I think the third factor which one needs to keep in mind is that even though you're talking in terms of our granaries being overflowing with food grains, we're just talking of two particular crops, rice and wheat, which are probably controlled by the government. The rest of the crops are actually more left to the market, and that's where our major concern is.
Right, okay. Mr. Joshi, I mean, what's your sense?
Well, I think I'd like to add a couple of things. I mean, first is that the frequency of bad monsoons on a long-term basis, I think that has risen over the last couple of years. The second is that I think what we have seen until now in the month of June, I think is subnormal monsoon, but that doesn't tell you anything about what's going to happen in the next 3 months. I'll give you two examples. I think take the year 2002-03, which was a very, very bad, severe drought year. The June monsoons were normal, the predictions were normal for the entire year, but after that what we saw was a complete dry spell in July and August, leading to one of the worst droughts. And take the year 2010, the June was bad, but the overall monsoons turned out to be good. So I think let's not read too much into the performance of the monsoons so far. I think what's worrying is that if this El Nino factor which was being talked about, if it does play out, then we have some trouble in our hands. Now, as far as I think the growth is concerned, monsoons don't play a very critical role in shaping the GDP because the share of agriculture itself has fallen over the years. But I think at this juncture, when you have so many clouds, dark clouds in the horizon, I think even we can't afford even a minor hit to growth. I think inflation is what I would be more worried about, not inflation as Madan was pointing out, not about wheat and rice where we have ample stocks, but I think if you look at the details of inflation, you see inflation not coming from these two commodities, but more from things like jowar, bajra, pulses which are unirrigated. I think the irrigation buffer for these crops is extremely low, and the demand-supply balance is also delicate because you don't have the buffer stock. So I think if there is a hit to monsoons, I think you'll see their prices spiral again. So I think and these are the commodities which are consumed more by poor, so not a very good news on that front. So we can't really afford a bad monsoon at this juncture.
Prashant, could I come in here?
Go on.
Yeah, Prashant, could I come in here?
Go on, Madan, yes.
As DK Joshi has mentioned, saying that probably overall growth is not going to be affected on account of the low weightage of agriculture in GDP. But we must remember one thing, that in the last couple of years, rural demand has added a lot to industrial production. So if we're really talking of rural incomes coming down on account of, say, an unfavorable monsoon and a low agricultural output, then I think the major consequence is also going to be in terms of demand for industrial goods. And that's where we'll have a problem, because we're talking of industrial revival coming from consumption from one of the segments, and the kind of support which has been provided by the rural sector would be missing. So I think that's another concern which we have out here.
Yeah, so it's not the direct impact, but I mean it's essentially the ancillary impact, right? I mean, which could be large. That's the point you're making. Quickly, Mr.
Can I add a little bit to that?
Yeah.
I think just want to point out that the rural economy and agriculture are not as synonymous as they were a couple of years back, because there's been a lot of things which have boosted rural demand, like wage increase in rural areas, Narega, etc. So I think but the point is that you can't afford a bad monsoon at this juncture, and even the incremental benefit that comes from a good monsoon will be very critical in today's environment.
Yeah, can't afford. I mean, that's, I think, one point which both of you agree on. Absolutely imperative that rains don't fail. I mean, essentially, that's the point we're making. Thanks very much, both of you, Madan and Mr. Joshi, for coming in and speaking with us this morning.